What is up everybody, welcome to another stock market video, and today I'm going to be sharing with you my top 3 mistakes that I've made in the first 6 months of my stock market investing journey. 3 mistakes are 1. Not knowing if I was a passive or active investor, 2. Investing outside my level of competency, and 3. Not having a set buy and sell price. At the start, before I had this public account that you see right here, I lost over $2,000 just from these 3 mistakes alone. I hope that by sharing the story, new investors can avoid these mistakes. And with that said, let's get on with the video. My first mistake was not knowing if I was a passive investor or an active investor. So how this applied to me is passive investing is investing in ETFs and index funds, which you don't need to think about. Just deposit your money weekly and invest in those funds and let them track passively. Those, however, offer much lower returns but are safer. You don't need to spend time on them each week, just set and forget. With active investing, like investing into companies, you need to track these each week to understand the health of the company, to see if their fundamentals change. My mistake came from when I invested in individual companies and I stopped tracking them, treating them like index funds. When the company fundamentals changed, I didn't even know. And that's when I left my money invested, not knowing the company was slowly declining. In short, when investing in the stock market, you need to figure out if you have the time and passion for active investing. So I do active investing as it returns me much higher gains if done correctly. But this also has much higher risks involved with it. My second mistake is not investing within my level of competency. This is with regards to companies which I didn't even understand the business model and how they would generate their money. I literally was just looking at the share price action chart and picking something that was going up. Don't do this. Instead, as a first-time investor, invest in companies that you have knowledge in. Like if you play video games, look at stocks that are video game related. To name a few, CPU makers like Intel and AMD, so that you can have a better understanding of the health of the company and how they generate their money, because you have experience in that field. As a piece of advice I came upon often is that if the underlying business is doing well and making money, the share price will eventually increase and follow. There is a lot of free websites to find company information like Yahoo Finance, Simply Wall Street, and even videos on YouTube to help you get an initial feel for the companies you might invest in. One of the stocks that I lost money in was when I invested in MGM Resort. I didn't really understand where they were getting their money from or how they were generating it. I didn't even understand what REITs were in the first place. So with MGM, I decided to buy while the stock was falling, while the global pandemic was happening. And as you can see from this graph, it was a big mistake. After buying at such a high price, I decided to sell because I was freaking out because I thought it would go to zero. Again, due to my lack of understanding, I lost money. So it's really important you make sure you understand the companies that you're investing in. For my third mistake was not having a predetermined buy and sell price. This is a much bigger topic, so I'll just go over the simple examples as there are much more comprehensive videos out there explaining each of these. This is the part where you need to start really putting that time into stock investing if you have chosen to be an active investor. Right here is TradingView, which is free and what I use. Technical analysis is another big topic, but really I just want you to know that stock prices will always go up and down. The chart that we're looking at here is Tesla stock, and you can see it's gone up, down, up, down. The share price is constantly moving, which is good news because eventually it will hit a price you're willing to pay for it. And this is a time where technical analysis is very helpful to better find these dips. Like all things, it's not always guaranteed to find the very bottom. It's just a tool to better predict a price range. Also, like many people, try not to get discouraged when the share price swings by up to 5 to 10%, as you would have done your homework already on the companies you own and understand why the swings are happening. For selling a stock, try to have a target price you want the stock to hit so that you can sell. It goes without saying you'll need to try to figure this out on your own. Or the other worst case is the stock drops in price. You need to have a price at which to sell and cut your losses before it ends up going to zero. If you're confident it can bounce back, then you can hold until you feel it's right to sell. You should have some rules around this and manage your risk. As I said earlier, when I was down by 30% when I started, I just needed to sell because I didn't know what was happening anymore, why it was dropping, and decided to take the losses. I took a break from investing and tried to understand how I lost thousands of dollars. Then came back to investing with a better plan to better analyze companies, understand their business models, And now I know the underlying health of the company, even if the share price did not reflect it. Because the share price sometimes doesn't reflect the current health of the company or the economy, and sometimes both of them can be in opposite directions. So even if the share price is falling, but you know the company fundamentals haven't changed, eventually that share price will come back up to the value it should be. So that was my top mistakes from the first 6 months of my stock market investing. I hope in some way that they stop you guys from losing money. Without these mistakes, I wouldn't have the understanding that I do right now, and most importantly, I've learned from them, which has allowed me to grow my portfolio and actually get some decent gains in the market. Well, that's enough for me today. Thank you for watching. As always, safe investing, so make sure you do your own due diligence on the stocks that you buy. May the gains be with you, and I'll see you on the next one. Goodbye.